What is up, ladies and gentlemen? Camilo here from Trending Waves, bringing you to our end of the market update for this Wednesday, June the 16th of 2021. So yesterday we were discussing and we were eagerly anticipating today's FOMC meeting minutes and the press release at 2:30. So a lot of interesting things were said. The Fed was really informative. So if you missed that press conference, I do encourage you to go and watch the recaps, as it is very important to understand what the Fed is projecting and what they're forecasting for the foreseeable future. Okay, so after throughout the day we were pretty muted, but when we got the press release, okay, and the meeting minutes, we saw a shift in momentum to the downside, something that in the past Fed meetings we saw opposite happening, which was a push to the upside. All right, so yesterday's video we discussed that might have been the possibility and that we were going to start seeing a pullback. So sure enough, it happened, and that's thanks to our Elliott wave interpretations. All right, so the SPY ended just shy of 0.56%, and the Q's 0.3%. Also the Dow was pretty low today as well. So the wave structure here is still suggesting we are seeing upside. Okay, we're reaching the top for the minor degree wave 3, at which point we are going to expect a 3-wave pullback into the wave 4, and we're still looking for the primary degree wave 1 to complete. Until we get the wave 4, until we get completion of wave 3 and the wave 4, we can start projecting outside targets for these levels or these degrees. All right, so the way we're looking at this, guys, is that we go up in 1 in the minor degree, wave 2, 3 is in the making, 4 and 5. So we're still within this trend channel. Okay, and all right, so let's dive into the 1 hour time frame where we have further dissect the wave structure here. So out of the March lows, okay, we go up in 1, ABC down into the wave 2, where we found support at the 50% retracement of wave 1. Okay, we then go up in 5 ways to the wave 3. Then we have A, B, and C at the 38.2% retracement support of wave 3 advance. So this is a common level, spot on 38.2% or 404 spot 61. In yesterday's video we were discussing that this is a ending diagonal in the making. Okay, so we were nearing the apex of it and we were anticipating a pullback. So the 30-minute time frame will let us know how the wave structure was unfolding there. So from the wave 4th low, we go up in 1, ABC down into the wave 2. Okay, we make 5 waves up into the wave 3, which came in at the 1618% extension of, let me highlight this for you guys, of wave 1 compared to wave 2. Okay, and you get the extension. So we have that measurement at the 1618, okay, or 425 spot 47, which is a pretty, it was actually the previous high. Okay, and then we saw a pretty sharp pullback to the intraday session today. So what I'm looking at this is that we want to see perhaps a push, one more leg up before we head on lower. So our targets for the wave 4 are the following. So we get a retracement from the wave 2 to the wave 3. Okay, a pretty good retracement of the 23.6 or the 38.2. Okay, those two levels are 420.69 and 417. So what I'm looking for coming into tomorrow, guys, is that I want to see a pretty much another push lower before we try to retest again this previous high. So keep this high on watch for a potential retest and then a sell-off. Okay, so that resistance level comes in at the 422 spot 90. Should we break above that, then look back for a retest of 425 spot 47. Okay, so that's the S&P. Let's see what else to review. That's pretty much it. I mean, the S&P, it's getting a little clearer now as to what it wants to do, but there is more clarity coming out of the Q. So let's dive into that chart right away. So the way we're looking at this, guys, is that we go from the third wave top in the intermediate degree here on the February highs, wave A, go up in B, and down in C. Now let's take a note real quick as to what we have here. So we have this resistance trend line, okay, forming, where we tested it once, we've tested it twice here, right, 1 and 2, and now we back tested it again but failed to break up above it. So the way we're looking at this, guys, is that after we completed the C wave, which came in at the Actually, let's go up to the daily time frame to see where that that fourth wave came into play. Let's zoom in here, and it's always good to look at the fib levels. All right, so wave C in the minor degree came in at the 61.8% retracement, okay, or extension rather, of wave A versus wave B, 317, and wave 4 in the intermediate degree found a retracement support, okay, from the wave 2 to the wave 3 at the 23.6. Pretty shallow, I say, but as you see here, we see fib confluence levels that held as support. All right, so back to the 30-minute time frame. Let's zoom in here real quick and let's digest this wave structure. So, like in the S&P, we saw the wave 1 go up from the May lows here, and then we saw the wave 2 pull back just, almost 100% of the extension of wave 1. Okay, and that's pretty that's not common to see, but again, wave 2s are valid just as long as they don't go beyond the 100% of the origin of wave 1. So as soon as wave 2 completed, we ran up in wave 3, so we hit resistance at the 1618, okay, which is at 335.51 area, and that's an extension of wave 1 versus wave 2, and you get the extension into the wave 3. Once we topped out in the wave 3, we sold off in three waves, right? A, B, and C, to the 38.2% retracement at 320 spot 20. So this retracement comes in from the low of wave 2 to the high of wave 3. We then went on to complete the wave 5. This was on June the 15th, which came in just shy of the 100% extension again of wave 3 versus wave 4 at 346. But the high here was, let's take a look. The high here was 344 spot 44, and now we're making a 3-wave pullback. So down in A, up in B, down in C. Okay, so the way we're anticipating this to be is that, like I said earlier, there is a little bit more clarity in the wave structure here. So the minor degree wave 1, okay, now we're looking for a 3-wave pullback just like this, all right, for the wave 2. Now the wave 2 can come anywhere between the 23.6% retracement. Actually, let's turn the other one on, which is the 38.2. Okay, the 23.6, 38.2, and the 50. All right, so let's review the levels we should be looking forward to. All right, let's zoom in here real quick. All right, so if we keep on heading lower, okay, our next level of support, which you see here, bounced off the 23.6% retracement, was at 337.64. So we found support here. We went on high, but we rejected the previous wave high. The previous high here at the wave B, which came in at the 342.79. Okay, so a support level to be watching is the 337.64 and 333.40. Should we continue heading on higher, resistance levels to be watching are 342 and the 100% extension, which is 346. Additionally to that, okay, this upper trend this resistance trend line will be another level to keep on watch. All right, guys. So, but I do anticipate that this is going to be prolonged. I don't think that this is going to be pretty abrupt and quick. I do think that we see some sideways price action coming into this week and the following before we can decide the next direction into the wave 3 in the minor degree. All right, guys, I think that was pretty clear. Today was, as I mentioned, rather interesting, but gave us some clarity out of the Qs, rather more interesting than the SPY. Okay, so once again, I thank you for your time. Consider subscribing to the channel, hit the thumbs up notification and the bell so that when I upload these videos, you'll be notified. As always, I do appreciate your time, and I shall see you guys tomorrow. Take care. Bye-bye.